G'day, I'm Todd Lees from Latima Brokerage and welcome to another Pulse Market Update. Given the Big Bash is on in Sydney next week, it seems like a perfect time to provide a brief update on the Australian pulse market. Now, the Big Bash is certainly not a reference to a one-day cricket match, but of course refers to the GPC annual Pulse Conference, which is being held in our beautiful Sydney Harbour next week. Hopefully, I am going to meet many of you at the conference, and I look forward to having a chat with you about the markets, both in Australia and your hometown, and also about the various commodities. Planting is in full swing on both the east and west coasts of Australia and is working its way slowly but surely from the north to the south as weather permits. We are 60 to 70% advanced in some regions, while in many areas of the south, planting has slowed down and even stopped because of inadequate topsoil moisture. An inch or two of rain is required before planting can continue in these areas. Acreage for most of the crops is probably not going to be too dissimilar to last year, given all commodity prices have been well supported throughout the 22-23 marketing campaign. Farmers' planting regimes will mostly be dictated by agronomic reasons, and therefore they're likely to stick to their normal crop rotations. So no major swings to various commodities or crops. Prices remain steady across the board, though farmers' selling has been light of late as they concentrate on their planting operations, and many have indeed already sold forward to June-July shipment positions. Price indications for some of the major pulses are lentils, 680 Kolkata, Faber's 420 Damietta, CHKM 570 Karachi, and Kabuli's 950 to the subcontinent. A couple of key considerations for prices going forward will be the worrisome El Nino weather prospects and the impact this may have on production for the crops. Another one could be the ongoing softening of container freight rates, which, if they keep heading in a southerly direction, could see containers finally becoming competitive with bulk freight rates, which is something we haven't seen since pre-COVID times. This could precipitate a freight reversal for some pulses switching back from bulk shipments back into containers. This will affect majorly commodities such as fibres to Egypt, and also desis and lentils to Karachi. Well, that's it for this wire. I look forward to seeing you next week in Sydney, and if you've got any questions or comments, please drop me a line. Thanks for listening, and bye for now.